Hey, hello everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. I hope you're ready for a new week, because this week is going to be another very interesting one. I mean, like I keep on saying that since January we have been like seeing every week, almost every week, kind of interesting, full of economic data, volatile, and yeah, it's sometimes uncertain, full of uncertainty. Look, we have the central bank extravaganza happening this week, so we have the major central banks delivering their interest rate decisions. So hopefully you'll enjoy this session. Stick around, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen. Today is Monday the 15th of September, 2025. So I hope you're all having a wonderful start of Monday. Ladies and gentlemen, I hope you had a nice weekend as well. I mean, I hope you're ready and relaxed for and you're prepared for a new week, a new week full of central banks. Look, that's why I called it the central bank extravaganza. So, yep, this week we have the top major central banks delivering their interest rates. But on all this and a little bit more in a moment, let's first go through our quick risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes. This week we do have a few central banks delivering a few economic data events as well coming out. So everybody's talking this morning about China, how we're seeing a little bit of a slowdown in there. However, the news outlets are trying to put a spin on it as if it's a, I don't know, major deal in terms of, yes, China's the slowdown, economic slowdown is important. What I'm saying is, like, if it, let's say, if it drops a few numbers here and there, when the numbers drop a little bit somewhere else, then we're also sad, but nobody's that panicking that much. In a way, like I said, it's every time like we're seeing this news outlet kind of trying to put a show or some sort, but look, it is important, not saying anything. It's just that, let's not over exaggerate certain things. Look, I'll jump into that in a bit. So also, just before we go any further, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Also, join me, my webinar on the 23rd next week. Basically, this is going to be the webinar where we are going to look into the RSI, the relative strength indicator, in this tool that is very popular, used by many. But what we're going to do is we're going to apply it in a real life market action. So we'll see if it works or not, what we can tweak a little bit, what not. So again, we will apply it on our demo account, of course, but of course using real life market action. So join. You can find the link in the description of this webinar. So hey, I'm more than happy to see you. By the way, this webinar is closed, so you need to register right here. Just click on that registration button and it'll take you to this page. Ladies and gentlemen, let's have a look at the markets. But the first one, as usual, economic calendar, ladies and gentlemen. Economic calendar. So let's go through the data that we saw already coming out, and let's pick up on what's going to come out in this week. So look, this morning, house price index, it improved. The house price index improved. It came out a little bit higher. Yes, it's still in negative territory, don't get me wrong. that's kind of bad. So, but in general, we are seeing a good tendency, at least that, So this is a nice moment here. It seems like the market, or it seems like the news outlets are not picking up on that. They're mainly picking up on industrial production, which came out on the lower side, lower than the forecast, lower than the previous. It came out, the previous one is 5.7, came out 5.2. Look, what can I say? I mean, it is a relatively lower number, yes, but is it bad? No, it's still okay. It's still, there is still growth, So the industrial production still remain. Yes, it's on a slower pace, but still, we're not in negative territories or anything like that, or closer to zero. So that would be a big problem. But look, this fluctuation happens, and we saw like a major one here, for example, when it came out in April, when we saw the 7.7 figure coming out, and then the next month it came out at 6.1. I mean, I don't think that everybody was kind of okay. There were concerns, but was there like was it such a big deal? No, so that's what I'm saying. So it's everything is a matter of interpretation. So what we're looking at here, like I said, as long as the tendency doesn't continue in the southern direction. So if the next number comes out, let's say below 5%, okay, we could start slowly kind of worrying. Then if the numbers come out like closer to 4.5, and then maybe to 4, and then below 4. So that's where the issue arises then. But for now, it has been around this area, around that 6%. So yes, we're seeing a move towards the 5%. The market, of course, will say that it's better to be safe than sorry, which I agree to. Yes, it's better to protect yourself, but again, I think that there are some bigger issues in the economy, and certainly interest rates are one of those. Now look, retail sales came out on the lower side, 3.4 against the 3.8 previous, forecast against the 3.7 previous. Unemployment rate ticked up by 0.1%, which is fine. Look, everywhere it's ticking up a little bit, and we saw the unemployment rate in the US ticking up as well. So okay. Anyway, look. But I think, of course, like I said, everybody's trying to defend, that the job numbers are what they are right now. This is the new norm, so we need to kind of be used to that. So, however, with the Chinese numbers, there is no new norm. Anyway, looking at the other picture here, other data, let me just refresh the page. I hope this number came out. Look, we still don't have this one, because this is, for me, the interesting one. The foreign direct investment number, the year-on-year figure, because the previous one was at minus 13.4, and this is what's going to be interesting to see here. But so far, we're not getting it. Maybe we'll get that number a little bit later. Going further, today we get the trade balance from the EU. And kind of that's it, to be honest. Now, what's interesting going to be later on, or should I say not later on, but during the Asian session, we're going to be getting the New Zealand food inflation. Now, look, the number has been, of course, on the rise. And if you compare it to the beginning of the year, when we were just like at 1.5, now we're looking at 5%. This is crazy, ladies and gentlemen. Now this, to me, this is a bigger problem, because if New Zealand is struggling, those guys produce a lot, so they do have, they grow a lot, and if these guys, are seeing such a rapid increase, of course, that will have its effect on the consumer spending. Either people will, spend less on, well, actually not either, mostly people will spend on other services, and spend less on services, spend more on food. I mean, that's logical when you have to, you have to choose. Either you want to go to the cinema, or you want to go, feed yourself. So kind of, and this is, like I said, this to me is a big problem. And of course, the previous number was at 5. If it comes out, let's say, closer to 5.5, I think that is the moment where we need to start being very careful. And we do understand that food is is one of those that always goes up, but again, by how much? And that's why you have the that's why we have core CPIs, which exclude food and energy, and in order not to kind of scare the market too much. Now look, going into Tuesday very quickly, United Kingdom job numbers coming out, unemployment rate 4.7. Let's see if we also tick up here onto the 4.8 side. Employment change number 200. We don't have a forecast, but what we do have is right, average earnings excluding bonus and average earnings including bonus. So the including bonus, it seems like the number has ticked up a little bit, but excluding bonus, we're seeing it drop. So, okay, that means the bonuses have increased. That's an interesting moment. So, like I said, we'll see how the market reacts to that, but certainly, unemployment rate is the key number here for the UK side. 4.7 is the current number. Let's see how this trajectory has been happening so far. 4.4, 4.4, 4.5 started rising here back in May. Started pushing to the upside. So for May, we have been slowly ticking up higher. Certainly, this is a bit of a worrying sign. I think up until we're up until 5%, I think the market will be okay with that. But once we start overcoming 5%, that's when I think everybody will start hitting alarm bells. I mean, some analysts or economists are already hitting the alarm bell, but I think for now the focus is on the geopolitics. European Union industrial production coming out. We don't have the forecast for the year on year, but the month on month is expected to improve, so that's interesting. Going further down the line here, Germany's economic sentiment together with the Eurozone ZEV economic sentiment, and we are expecting much lower numbers. That is a pity, to be honest. We could expect the euro to decline a little bit. Canada going further. Canada will be delivering its interest rate. Yes, they will be delivering its interest rate, but first we'll deal with their inflation numbers. Look, the core year on year, the core and month on month, we don't have the forecast, but let's say we look at the year, we did slow down a little bit. Now, we did, reverse course a little bit to the downside here during the last reading. So it's going to be very interesting to see if we can actually tick back up somewhere back above the 2.6 territory, because if we do jump above the 2.6, this kind of like I said, this could of course help strengthen the Canadian dollar a little bit, but for the consumer and in general for the market, I think that this is where everybody will start picking up and saying that, inflation is a problem, and the thing the Bank of Canada needs to address that. So, long story short, what I'm looking at here, I am looking at the number. Like I said, I'm not going to go for any, let's say, forecasts or anything like that. I just want to see what's going to happen. I think it might tick up a little bit here. Again, it is just a random guess, to be honest. I mean, I wouldn't say that it's a something like a measured thing here. No, it's very difficult nowadays to predict, because again, at one point we're seeing a little bit of a slowdown. I think that maybe the slowdowns are happening in order to kind of support the central banks in their decisions to go for those rate cuts. So look, the year-on-year inflation, the headline number is at 1.7 in general. Australia is doing good. Canada. Why am I talking about Australia? Canada is doing good because Australia is also doing good, actually. I can't deny that one. Canada is doing good in terms of inflation. Now, some of course are afraid that maybe it will cause deflation. But no, I really don't think so. I think that inflation will pick up in there. At the moment, they have low rates. Their current interest rate is around 2.75, so they have kept that interest rate for a while, and certainly going into this meeting. But actually, you know what? I'll pick up on that meeting. But for now, their inflation is okay. It's around their target, their 2% target. Look, it's going to be very interesting to see what's going to happen. If we're going to tick up, if we're going to see a tick up here in inflation, that might maybe spook, or actually I wouldn't say spook. No, I think that would still be within, in line. If we see anything up until 2%, I think that's fine. We stick to the current trajectory of the central bank, the Bank of Canada, and I don't think that we're going to see like any major surprises from the bank. And in general, in terms of surprises, nowadays I think that the central banks are quite on the careful side. They rather just kind of stick to what they said like a month ago, like what they have promised that's going to happen in this meeting, and they will just kind of be better to do that, because at the moment the market is so unstable, and they don't want to be the source that will cause some sort of a turmoil in the market, so rather have somebody else doing that issue, having or applying that issue, being the problem, so it's like something like that. So it's good, it's convenient to blame everything on the tariffs, but not that I'm defending, no, but in general, so of course the administrations are, saying that the central banks are doing bad, but actually. Anyway, look, long story short, I think I'm mumbling here already too much. So, long story short, inflation, headline inflation is expected to come out on the, well, actually, there's no, let me just check another source. I don't have a forecast here for the year-on-year number. The month-on-month is expected to be on the lower side, but the headline year-on-year number is expected to tick up a little bit by 1/10%. So I'm kind of leaning towards that as well. I'm leaning towards a little bit of a higher number here, to be honest. But like I said, 1.8 I think sounds perfect, and it could just keep the bank, alert all the time, just to understand if they're doing the right job. And look, going further, into Tuesday, U.S. retail sales. Now, this is something that the market will be watching carefully. The month-on-month number is expected to come out on the lower side, so we'll see how the year-on-year number shows up. I don't see a forecast here in TradingView. Let me check another source if there is a forecast of some sort on the retail sales. So the month-on-month, yes, the plus 0.3. Retail sales year-on-year is expected to decline as well. So we're expecting to see something of around 3.2 as I can see here. Again, let's not overestimate here. I think that if we, the market, we don't have good results here or good forecasts here. I think maybe the market is really uncertain what to do next. So let's not rush into conclusions. Industrial production, the US will be coming out with that. So expectation for this one is, well, there's none, but the month-on-month is expected to be a little bit on the higher side. So that's, that's good. Jumping back into zero, that's great. Coming out of negativity, wonderful, So let's jump into Wednesday, and I think that, ladies and gentlemen, Wednesday will be the big day. Look, we have the International Monetary Market kind of meeting, gathering. Also, UK probably will be watched very carefully because they're releasing their inflation numbers, and we know that they're a little bit on the higher side. The Bank of England has its inflation number kind of target at around 2%, as majority of the other central banks. Well, with currently what we're seeing here, 3.9 on the headline, core 3.7. Look, well above, almost double, right? Almost double, and that is a bummer. I mean, I would say, that's not something that the Bank of England would like to see. And certainly, yes, we'll be watching the interest rate decision of the central bank this week. But going further, oh, by the way, if we suddenly see a tick here to the upside, we're going to enter that 4% territory. Of course, don't get me wrong, back in 2023 we were around 8, we were around 7, so a 6 in a way. So I would say it's not that that bad. 4% is not that bad in comparison where we were in 2023. But still, that's the problem. That's like the trajectory. It started off here also very calmly. So it was like when we were back at around 0.7 or 0.5, 0.75, something like that. It started rising, and we were like, yeah, it's still okay. Back in 17, we were around 2%, 3%. But then look at this. It started escalating very rapidly. That's what people are afraid of. So it's not really, let's say, yes, in comparison to this, it is not a lot still. The 4% is still not a lot in comparison where we were at the in 2023. But again, like I said, it could start off the same as well it did last time. Let's have a look in terms of other economic data very quickly. European Union, we have a Lagarde speech a little bit here. We have the retail sales from UK before that, actually. I forgot to say that. So we're also expecting a little bit of a tick down here. Okay, let's see by how much the tick down will happen, or in general, if it comes out on the higher side, it could, boost the British pound. Eurozone inflation numbers as well. Look, 2.1 against the two previous. That's the expectation at 2.1. So look, I would say this, that it's normally the Eurozone, the German numbers as well, they come out like as forecasted. So it's like really not really, let's say, that much of a surprise or something like that. So in a way, if you're comparing data in terms of, let's say, from one country, for example, when the US delivers data, it's always some sort of like always an event, so because again, you don't know by how much it will deviate from the forecasts or from the previous. Some might say that's great because it increases volatility, it increases opportunity in the market. That's one thing, yes. On the other hand, can you really rely on on these sources? If they're, let's say, and then they do some revisions, and you probably understand what I'm talking about, like U.S. job numbers. Now those are a little bit of a show. But however, with the European data, right? Everybody's like, yeah, well, they come out as expected all the time. They're quite accurate. On one hand, yes, that doesn't present much volatility. It doesn't create much volatility, but doesn't present much opportunity. But again, like I said, the way you need to look at the European data is that if it comes out as a forecast as their previous, that's fine. But if it comes out, like if it deviates at least by 20 basis points, or like by 0.2% or like 0.3%. Now that's interesting. Now that's where, like I said, the excitement comes in from the European data. Going further down the line on Wednesday, look, we have the U.S. building permits and blah blah blah, and then of course the Bank of Canada, which is expected to cut a rate by 25 basis points. So it's going to be an interesting moment. Look, they can afford. Their inflation is on the lower side. It's not even reaching 2%, so they can afford. The only problem, of course, what they have is like deflationary, like that. Look, I think that it'll pick up. I don't know if it's going to come out. Let's say inflation is going to come out that low, but look, if we're going to get a surprise of some sort, and we're going to see Canada's inflation coming out, let's say here in the core coming out much lower than the previous, the headline coming out much lower than the previous year, let's say it comes out at 1.4 or something like that, then yeah, of course, that's something that the bank needs to worry about. But maybe they need to go for even more drastic rate cuts. So again, at the moment, we're expecting only a 25 basis point cut, so that's okay. Where's that Canada? Where did I lose Canada? Hey, Canada. Yes, so that's something, like I said, that's something to keep in mind. And then we're going to go further. Of course, the press conference is going to be very important. It's going to be like 45 minutes after the interest rate decision. So check out the interest rate decision or the Bank of Canada's interest rate decision when it comes out on your side, just to understand like what time to keep in mind. And if you are trading Canadian dollar, ladies and gentlemen, against any other currency, just be kind of careful on the careful side. And of course, the main event, as somebody might say, is the Federal Reserve interest rate decision on Wednesday. So that's going to be late in the evening. Look, the current expectation, let me just bring in my Fed Watch tool. Yep, there we go. Oh, finance. All right, okay. Look, I'm going to do it this way. What if I don't want to delete group? Oh, okay. Anyway, that's fine. Look, I don't need those anymore. But look, what can I say here? The expectation right now is for a 25 basis point cut. That's fine. That's something that the market has been expecting or was expecting, and I think that this is what they will stick to. The previous the previous time the bank didn't do anything, right? So I think that this time it's more of a not that they really need that cut. They, of course, they say that right now the labor market, the job market is struggling, and that's why we need that cut in order to boost companies, to increase lending. Companies feel a little bit better about themselves, and they can recruit more. However, I really doubt that this is going to help. So I think that the central bank, the Federal Reserve, also understands that, and I think that the issue here is that they're doing this cut is like just for the White House. Hey, there you go, guys. This is what you wanted. Now back off. Let us do our job, right? At least to me, it sounds like that. It looks like that, because okay, you can stimulate the economy with lower interest rates, but I think that the problem is not much in there. I mean, the interest rates, yes, are there on the higher side, but I think you would need to maybe cut like really drastically in order to kind of do something. But the problem is that is it going to help the job market? I don't know, because again, we're having issues with AI. I talked about this last week. I said that look, we're seeing the tendency of smaller and low skilled jobs, like especially office jobs, getting given away to the AI, right? And you have your senior sitting in the position. He overlooks the AI, and the AI does the junior job. Now that's a problem. So lower interest rates are not going to help that. Honestly, what they're going to do is just going to help the companies to get more cheaper AI. Look, again, that's only my thoughts. These are only my thoughts, and again, this is a question, and this is a moral question. Is this good or not? But again, somebody might say this is immoral. Somebody might say that this is progress. You be the judge. You can drop me in the comment box, and it doesn't matter if you're watching this live or recorded. What do you think about this? Do you think that this is progress, or do you think that this is like a little bit of a disaster for the labor market? Let me know in the comments. Look. So yeah, going further, let's go. Where's that? Where's my economic calendar? Oh, did I close it? Yeah, I did close it. Yes. Where is that? Yeah, there we go. So going into Wednesday. So yeah, like I said, the interest rate decision from the Federal Reserve is coming up on late Wednesday. So we're expecting, and also we're going to be getting the dot plot. So yeah, that's going to be an interesting one as well. So keep your eyes on that. And hey, certainly for now, the expectation is for a 25 basis point cut, but certainly there is a small chance for a 50 basis point. But look, I really doubt that they have to do a big surprise. It's going to be a big surprise if they're going to go for a major cut. But I don't know if the market will see that as a good positive thing, because again, it could raise some issues. So I think that the 25 basis point will be enough. Anyway, going further down the line, so Thursday, ladies and gentlemen, or actually very early hours of the Thursday morning, GDP growth from New Zealand. This is what we're going to be getting. We're getting a number on the lower side here on the Q-on-Q side, but a better number on the year-on-year figure. Let's see what's going to happen there. Machinery orders from Japan. We're expecting some lower figures. Jumping into Australia, Australian job market is coming up. So yes, Australia. Look, unemployment rate continues to hold near the 4.2. Other metrics are missing, so employment change is expected to come out a little bit on the lower side. Again, it's going to be interesting to see if they're going to come out on the 4.3 side, for example. It's okay, it's fine, it's not the end of the world, it's still okay. Maybe it's like you get a hiccup month, you know, so that's absolutely fine. Going further, look, we have the BOE. Now this is where the Bank of England will shine, and certainly the expectation is for a no action on the UK side here, and let me just have a look at the other economic calendar very quickly. So yeah, the expectation is for the 4%. So look, the bank right now is mixed here. So there are 8 members who are in favor of the unchanged, and 1 member who is in favor of the cut. What's going to be interesting here is that because we are expecting a no action here from the BOE, what I'm going to be interested in is in this. So if this number 1 will change, or actually the actual number will come out higher than the forecast. If it comes out higher than the forecast, it means we're taking a few members. Some of the members here jumped into this, into this field, into this block of those who want to cut. And that, of course, could weaken the British pound a little bit, because again, we're saying 4%. I think I think that they will try to take the similar approach, like the U.S. government, in terms of trying to pressure the BOE to go and cut rates. Look, we'll see. Again, it's a different different world, but slightly different world. But certainly we're keeping an eye on the BOE interest rate decision. We're keeping an eye on the British pound, so we'll go from there. Going further down the line here as well, foreign bond investments from the U.S. And look, I mean, then of course Japanese inflation numbers. Now this is what the Bank of Japan will be keeping a very close eye on, because only like 3.5 hours later they're going to be delivering interest rate decision. Currently we don't have an expectation of anything happening, like a cut nor a hike, but the thing is that we're expecting something like that in October time. So let me just double check very quickly. Yes, we're expecting a hike in October by 25 basis points. So this is where the interesting bit comes in. So this is where the BOJ could shine, but again, that's later. This is where the Japanese yen could shine, because going into October time, if we are going to be expecting a rate hike, this of course could strengthen the Japanese yen, not after the interest rate decision, but probably before a little bit. So keep your eyes on the Japanese yen. I think that could be an interesting pair. Like I said, watch out for the markets. Of course, if the markets suddenly turn south, certainly yes, there is an issue that we could see Japanese yen picking up pace. Look, ladies and gentlemen, let's jump into Germany. Germany here, in terms of their PPIs, they're coming out on those are not very good. Yeah, the expectation is not very good on Friday, so we'll see. Maybe the euro could decline a little bit. Now again, UK takes the spotlight with its retail sales. The month-on-month number is expected to decline. The year, actually, month-on-month, both numbers, month-on-month and year-on-year, both are expected to decline. So we'll see how that plays out, of course. Eurozone, nothing major, and then retail sales from Canada. This is what how we're gonna wrap up the week with the Canadian retail sales, and those are a little bit. Let's say we have the month-on-month number, which is the preliminary one. Wait, let me just double check, because I think that's one of them is going to be the upcoming month, and the other one, yes, that is correct. So the preliminary number is for August. So this number right here is the August number, the preliminary number. The final ones will be for July only. So there is quite a I would say, and again, I don't know. I think that this number will be important one, the preliminary number. Yes, the final figures are important. However, if those are for July, I think this is a little bit of a stretch, and I think that has been. We passed that. It's like a way too big of a lag. So I think that the Canadian dollar could start just reacting to what's happening in the oil market, which I'll jump into in a bit, and that's why the maybe the preliminary number, the August figure, will be the more interesting one to see here. So, ladies and gentlemen, and now let's jump very quickly into the indices and everything, commodity indices, commodities, forex, and cryptos. Look, Nikkei, of course, enjoying the moment for now. I think that the market is pushing higher, also on the fact that we're not going to see a major, neither a major cut nor hike, and especially no hike yet. So the Japanese Nikkei 225 can't afford to travel a little bit further north. Look, 45,000 zone. That's what we're watching very carefully. We were very close to hitting that on Friday on the cash index. Let's see if we can eventually test that this week. I'll get more comfortable with the downside if we do see a drop back below the 44,000 zone, somewhere around here. So, sorry, had to sip of a little bit of tea. My mouth has been drying out already. So, look. So that's the case with Japan. China, look, this is the interesting bit. So if you remember in the beginning of the show, I started saying about like how everybody's like panicking about China, how everything is like bad, like especially, as I said, the top popular news outlets are like, oh my God, China is like, blah, 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 this and that. So, right. I don't see if China AFA 50 dropping, falling off the cliff here. No, on the contrary, it's pushing higher. On the contrary, by the way, let's check if we did get the foreign direct investment numbers later here. Let me just see if that's the case. No, we still don't have those. I mean, let me just check another source. Maybe they came out. It's just the trading view didn't update. Foreign direct investments. Let's see if that's going to be. No, I don't have that number. Anyway, okay, maybe this is something, maybe there's a glitch from the trading view side. So, but long story short, for now, everything seems to be fine. Everything seems to be looking quite positive. I am going to continue targeting the upside, and I'm aiming still for this highest point of October of 2024, which is around the 15,406 zone, somewhere around there ish. If we, continue to trade above the 15,406 zone. If we continue to trade above the 15,000 mark in general, 15,050s maybe, I will continue targeting the upside. Ladies and gentlemen, US, of course, the big day on Wednesday. We're getting the interest rate decision. Everybody's watching that so far. Look, we had a great run on the Dow here last week. In general, all major indices, we had a great run. And if you remember last week, I talked about one thing. And the week before that, actually, that whenever one index goes for an all-time high, the next one kind of follows shortly. But then everybody's waiting for the third index, and when the third index eventually drags itself to hit a new all-time high, what do we get later on? We get like some sort of like a little correction. Now, I don't want to spread the panic or anything like that. No, maybe we could still grow a little bit more, and everybody's going to say, "Hey, Darius, see, you were wrong. Why were you so skeptic? Why were you such a skeptic? So, but I'm just going from what I saw in the past, so that's what I'm applying here. Look, I think that there could be a little bit of profit. Let's call it a profit-taking moment, okay? Because yes, we don't want to say anything negative, right? Whenever we see a decline, right, we call it profit-taking. Well, let's call it profit-taking in that case. Fine, I'm whatever you want to call it, whatever you want to call it, a move to the downside. Now, do I say that you need to start jumping into the downside? No, not yet, of course, because we need to wait for some clues, some sort of like confirmation breaks. Look, for me at this point, I think that maybe the drop back inside the box here could be the first indication. So if we do fall back below the below somewhere here, below this 45,800 zone ish, if we do fall back below the 45,800, I'm going to consider a little bit of a move to the downside. S&P 500, and that's what I'm talking about. Look at this animal. Look at this. It's just pushing higher. Is just unstoppable. It seems like that, but again, we're in the pre-market. We created a new all-time high on Friday, and today it seems like we want to go above it. So I will say what I say usually is that whenever we go and create a new all-time high, we surpass, that current all-time high, and then we surpass that, and it becomes the previous all-time high then. But if we then see the market kind of closing the day below the previous all-time high, to me that's a little bit of an bearish indication. Nasdaq, very quickly, this one's trying to still go higher here, and I think that it's at the moment it's difficult to find a stop limit here. But of course, whatever comes up must come down. So for me, I would say if we do suddenly drop back below the 24, actually, you know what, 24,000 zone, I think that's the better option to watch. If we do fall back below the 24,000 zone, I'm leaning towards the downside. Dollar index. Now this one's, look, finally we broke the lower side of this triangle and we stayed below this 97.42, so I'm continuing to target a downside, but I'm only aiming first for the 96.88, and then actually I'm just aiming for that $96 mark because it's a nice psychological level, and it's the lowest point of this year. The German index DAX, very quickly, so we are open, we're seeing a push higher here, so but again, DAX is ranging. That is actually maybe even, I would say, pushing a little bit to the upside. We could say maybe DAX is forming something of a little kind of ascending triangle pattern here, but then we look at the prevailing trend, it was to the downside, and maybe this is just a triangle, not an ascending triangle. So yeah, it could be a bit of a bearish indication as well. But look, either way, it doesn't matter. Triangle, no triangle. If we do drop below the 100-day EMA, I'm going to lean towards the downside. For the upside, I just need to push above the 24,000 zone here, and then we'll go from there. Jumping into the FTSE 100 very quickly. So yes, failed to reach the all-time high on Friday and reversed sharply. So we're keeping a close eye on this, and I don't want to rush into things, of course, but certainly it's an interesting moment here that we're seeing. And of course, it will be a more interesting moment when the BOE will be coming out with its interest rate decision, not to mention the inflation numbers and the job numbers from the UK. Let's jump into the Forex world, ladies and gentlemen. AUDUSD, so yes, continues to push higher. Of course, the market is loving the fact that the bulls here, the AUD bulls, are loving the fact that the US dollar remains on the lower side, and this helps risk currencies like AUD to continue pushing higher. And I think that we're on the right track. I said to you that I'm aiming for the 0.6687 territory. Well, I think that's where we could get. AUDNZD, so there we go. Beautiful move here. Beautiful move to the upside. We're clearing this higher area, this key area of resistance near the kind of 1.117378 levels respectively to the highest point of February of 2025 and to the highest point of November of 2024. Let's see if we can, we're probably going to clear that, but what's going to happen here is that we're going to clear those two levels and end up testing this upside line, and then we'll see if we can stay below it. If we can stay below it, I'm leaning towards the downside. AUDJPY. AUDJPY continues to push higher. We broke this key area of resistance. That's fine. So far so good. Everything is in risk on mode right now. NZD, just a quick update, still to the upside. NZDJPY, there is still room for some higher areas. USDJPY. Now this one's interesting because look at this. It has been, staying in a range for some time now. Like, I mean, it keeps getting us these false breakouts, which I don't really want to see. But again, it just points to me that the levels that I'm watching are quite important. And if we do see the body of the daily candle remaining outside of this little range, then I'll consider the next short-term directional move. But let's not forget that we're in a somewhat of a rising something in a rising wedge pattern. So according to all the TA rules, such patterns tend to break to the downside. But again, we need there's a lot of ifs. Now then, USDCAD. So of course, big week for the Canadian dollar. Interest rate decisions, CPI. Yes, let me just double check again very quickly. So on Tuesday, Canada's inflation numbers coming out. So keep your eyes on those. On Wednesday, the BOC interest rate decision. On Thursday, if there's nothing, no. Yeah, that's kind of it. So apart from Friday, then we're going to get the retail sales number. So watch the Canadian dollar. Now we're at a very key important area of resistance, which is near the 200-day EMA. If we clear that 200-day EMA and we clear the 1.3879, I'll go to the upside. USDCHF, we broke below the upside line. There is a chance now to go towards the lowest side of July here, near the 0.7871. Let's see if we can do that. EURUSD. So okay, look, flirting. Let me first of all get rid of this upside line. That's it. No longer needed. Now I'm just gonna stick to this simple idea. As long as we stay above this 50-day EMA shown as the green line, I'm gonna continue targeting the upside. That's kind of it. Certainly, the 1.1830 is something that I'm watching here very carefully. This highest point of July, it's the next big target for me. I'm just going to keep an eye on that one. EUROJPY, certainly a nice little ascending triangle pattern formation here. The 174 is the barrier that I'm watching on the upside. Let's continue doing so. And according to all the TA rules, such patterns tend to break to the upside. But again, mistakes happen, and this tends to break lower as well. So either way, ladies and gentlemen, just continue monitoring the formation here, the barriers of the formation. GBPUSD. So I talked a lot about this for 3 weeks now. When we came here, this was mid-August. I said, look, this smells like a possible inverted head and shoulders pattern. But what I didn't know was that it's going to be somewhat of a complex head and shoulders pattern, because look at this, beautiful left shoulder, head here, neck, and a little bit of a complicated right shoulder. So that's why we're now like flirting with the neckline, which is around 1.3585. If we can get a nice clearance of that one, then yes, great. I'll consider some higher areas. I will abandon this inverted head and shoulders pattern idea if we fall below the 1.3370. GBPJPY also approaching key area of resistance. Let's see if we can clear that, and let's see if UK economic data can help us achieve some sort of goals here. Jumping into gold. So gold is stuck for a few days now after rallying here like very strongly. If I can put it this way, we rallied, we tested my 100% on the Fibonacci extension here, which is drawn from the lowest point of April to the highest point of April to the lowest point of May. And there we go, we're near the 100% here. So we're, like I said, we're at a very interesting spot. So if this provides good resistance, I'm leaning towards the downside. Silver, very quickly on silver, still on the upside, still wants to go higher. So yeah, as long as we stay above the 41.45, I'll continue targeting the upside. Palladium, very quickly, ooh, very nice shooting star here. Look at this, wow, this is a reversal signal, or at least it seems like that. Look, we tested the 61.8, now we're seeing a possible reversal. Let's see if we can stay today below the 50%. If we can, I'm leaning a little bit more towards the downside. Platinum, very quickly on platinum, tested the upper side of this rising channel. If you're wondering why do I have a rising channel like this with with this area, like violation area here, well, everything kind of has to deal with the weekly chart, to be honest. Look at this beautiful false breakout, right? So yeah, I mean, yeah, it's one of those. You can get, you can get some of this action. Oh, actually, let me just adjust this. There we go. So you can get sometimes such an action, and you need to kind of keep a very cool head on your shoulders, because again, look, it rallied on Monday, remained above this upper side of the rising channel, pushed higher on Wednesday, scared a lot of traders probably who were in this, and then sold off very quickly. There we go. That's what we got. So again, for now, I am keeping an eye on this very carefully. So again, like I said, I'm not really bullish, to be honest. I'm more on the bearish side, but again, I need some confirmation. Maybe a drop below the 50-day EMA could do the trick. Copper, very quickly on copper. There we go. Boom. 200-day EMA provided fantastic resistance. We held nicely. We held nicely below that 23.6. I am so happy about this that, oh my God. So look, for now, I'll say it this way. As long as we stay below the 200-day EMA and the 23.6, I will continue targeting the downside. It looks in general like a bearish flag here or something like that, but again, some confirmation breaks are still needed. Oil it did have an attempt on Friday to rally, but yes, the $64 mark, my $64 mark, together with the $65 mark, are the ones that I am watching very carefully. Look at this beautiful thing here. Pushed higher, tested that area, rejected, and drifted back down. Look, it still looks like more bearish than bullish, but within this formation, we could see some bullish activity kicking in a little bit. So I don't want to, like I said, don't want to rush into any conclusion yet. Natural gas, we're falling below the psychological 3 level. That's interesting. So as long as we stay below the psychological 3, I'm leaning towards the downside. Coffee, very quickly on coffee. Boom. There we go, ladies and gentlemen. Beautiful rejection here from this broken trend line to the downside line here. And I said to you, like, I'm going to continue targeting the upside if we continue to stay above this downside line. There we go. We got the move. So next, my next target is the 418, and then we'll go from there. Cocoa. We're remain below the 7,635 levels. As long as we stay below that, then yes, I will continue targeting the downside. Wheat, very interesting wheat here. A little bit of a choppiness, yes, happening. But look, I mean, if we start falling below the 500 zone, then yeah, I'm going to get a little bit more bearish. Sugar. Ooh, now this one's interesting. Sugar is knocking on the door here, knocking on the door of this downside line. If we can get a nice clearance of that, amazing. We could have ourselves a nice little double bottom here. Let me just grab this line. So, eclipse, there we go. So, we could have ourselves something here and something here. So if it's going to be a double bottom, hey, certainly we would need to wait for a clearance of the 17 zone, because that's the neckline, but we could slowly start picking up, buying interest somewhere around here, maybe again. But look, there is still an obstacle, this downside line, the 50-day EMA, the 100-day EMA. So there's a lot of ifs. So I would say just to kind of be careful and have your stop losses in place. And quickly, the last commodity here, cotton, pushing back up. So that's great. That's fine. What can I say? For now, it's nothing to add here. Just more upside within the descending triangle pattern. So, ladies and gentlemen, finally for dessert, the crypto world. So yes, they pushed higher nicely here, but found good resistance near, slightly below this 117.40 zone. 117,400 zone. If we can get a nice clearance of that one, I'll go to the upside. I'll go for that all-time high again, maybe, and we'll take it from there. Bitcoin Cash, flirting with that 600 zone. So look, 600, I talked a lot about this. If we can clear the 600, I'm going for the 632 and maybe above. Ethereum, beautiful pop here on Friday, forming something of a bullish flag. You can see yourselves here, pole bullish flag here. So yeah, let's see if that's going to be the case, if we can travel back to that, maybe even 5,000 zone. Let's see. A Ripple jumping back above the, not jumping back, still staying above the psychological 3 level. Let's see if we can test this broken downside line from above. test this area, test the 50-day EMA, rebound, and push back up. So in other words, I'm kind of leaning towards something like this. Litecoin. Litecoin is in a rising channel still, but we're seeing a decline lately. And we're near the lower side of it, so lower side of the rising channel. And that means that there is hope that the bulls could, step in near the lower side and push it back up. But of course, I said it before and I'll say it again. To me, this looks a little bit more bearish. Why? Because the prevailing trend was to the downside. We're now in this rising channel, so there is a greater chance for this one to break out lower. Dogecoin drifting lower for sure. Look at this. After such an amazing rally where we tested the 0.30 zone, now look at this, giving a big portion away. And let me just apply my beloved Fibonacci. I think it's perfect here. Look at this, perfect 38.2. Now this is where we're currently stalling. This is just amazing. We're resting near this area. Let's see if we can actually rebound and push back up, or actually the 38.2 will be the gateway towards the 50 and the 61.8% retracement. Polkadot, beautiful rally as well. Friday here, sorry, on Saturday actually even. Rally came very close to 4. I talked about this. By the way, I talked about this. And there we go. We came very close. And now we're dropping back below the 200-day EMA. As long as we stay below the 200-day EMA, I'm leaning towards the downside. And finally, my beloved Tron, there we go. We're a little bit on the modest side, but still looking quite positive. So basically, if we continue to trade above this area, above the 0.3439, I will continue targeting the upside. If we start falling below that, yep, I'm going to lean a little bit lower. Ladies and gentlemen, that is a wrap. That is a wrap. Thank you very much for watching and listening. I really appreciate your time, ladies and gentlemen. So I hope you, like I said, found this useful. By the way, just a quick, again, reminder that you can join this webinar here. That's happening next week. So feel free to, to access the link, register. This is a closed event, so hopefully you'll be there. We're going to apply live market action on the RSI to see if if we can find any good or bad sides of it, yeah, we'll go from there. Ladies and gentlemen, I hope you found it useful. Ladies and as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I shall see you on Wednesday. Bye for now.